I think you have to put it into context of the January number was extremely strong, so up over 5%. And remember, that's when we got the $600 stimulus checks going out. So it was kind of juiced by that. February, remember, lots of bad weather. There was actually, you just talked about it, there was some delay in tax returns, et cetera. So I think that's going to hold down February. But, hold on to your hat because March, we've got the bigger checks going out. So I think, most people are really going to look through this and say there's a big retail sales number likely coming in March and perhaps, moving over into April as well. So I don't think it's going to upset people in terms of some sort of worry about the economy and may, in fact, again, when you're thinking about central banks, say, oh, here's another reason why we may not want to be so accommodative.
Interesting. So back on that FOMC meeting later today, it's going to include the return of those dot plots that a lot of people think are famous or infamous, whichever way you look at it. Kind of shares the outlook of the federal funds rate from different members. How do you think that Jay Powell and the markets will react to any movements of those dots?
So I think it will make Jay Powell's job a lot harder if those dots move because, how they would move is probably move in some sort of rate hike a little bit quicker than expected. I actually don't expect that. I think, one way or another, I think it would make everyone's life easier, at least on the Fed side, if they don't do that. Either way, he's going to have to spend a lot of time talking about inflation being a transitory item and that the Fed's going to stay accommodative. And I think that's the script that he's going to go with. He's going to have to do a fair amount of dancing, but it would be worse if they changed those plots.
So, Bill, let's talk about a forecast that came from you for Q1 GDP. You have it at 10%. Just for perspective, the New York Fed has it at 8.6%. Why are you feeling so optimistic?
Well, I think, part of it stems from what I talked about earlier, which is that stimulus. So running through the retail sales. So that means, obviously consumer strong. I'm already, if you think about reopening, one of the things I watch a lot of things on that, but I think the easiest thing to point to is the mobility numbers. So, they track the cell phone usage in terms of how much it moves around. Mobility is the highest it's been post-COVID. And that's just telling you people are getting out and about. So all the other things that you track around vaccinations, et cetera, at the end of the day, if people are moving around, I think it's a highly likelihood that you're going to see a very strong economic numbers. There's a lot of things we could talk about, but I think that's the easiest one.
Shepard Smith here. Thanks for watching CNBC on YouTube.